Hi there, traders. This is Brad Gilbert with the week ahead preview starting the 27th of June. All right, now we've got a really good start to the week. All right, I'll just go through the economic numbers and see what's sort of the major focus for the markets. But the really good thing is we've got durable goods numbers coming out on Monday. And there's a few other little side pieces here to make note of. If I just go up here and change it to 2, so it'll give you all the medium to high impacting numbers. You'll start to see there's a few other things, the pending home sales as well, right? Now, the market's really boiling over there in the US, so it's going to be interesting to see how these numbers come out. Now, the fact that they're coming out on Monday gives us a potentially really early lead into the week, right? Now, start trading Monday, Asian session. The US equity futures are up, but we're not really seeing much of a connection here with the major currencies. They're sort of in between. Now, when I say they're up like sort of, 2 pips or 0.02 and 0.03. So not a lot of movement, which is good, right? I like a Monday that is structured where there's not too much going on, right? Just have a quick look at the markets. The cryptos seem to have stabilized somewhat. Equity markets closed the week last week on a really high note. That's really good. Right now, what are they doing? Well, as we come into the European session, they're a little bit mixed, if anything, slightly up, but no massive risk on, risk off profile across the currencies or anything like that. And we're not seeing, a major clear connection across the board. Of course, with that strong close on Friday in the US equity markets, you are going to get the clear, strong move in the Asian equities, and that should roll over into the European equities, right? When that fundamental data comes out, and what I'm talking about there is the durable goods. That's when we get a chance to have a look at, okay, let's see how the market likes this data. It'll be, the impact of those numbers will be felt on the equity markets, and then we can sort of start to look around, see if the US dollar is impacted or not, right? So that's the really the best part about the week so far. I'll come into the charts in just a second, but just to come back and just to zoom in on the sort of top tier numbers. What you're looking for is obviously durable goods Monday. The ECB are having a forum on central banking. Okay, that's interesting, but it goes for a couple of days. So I'm not really interested too much. I'll be keeping a close eye out for it. Christine Lagarde, the ECB president, is speaking on Wednesday. That's more of an interest to me. Of course, you've also got the Bank of England Governor Bailey and the Fed Chair Powell also speaking there as well, right? So they're all having a bit of a powwow. And this is not, if you've been trading a while and you've been listening to me, this last week of the month is usually where they roll out the stooges, right? And they give us a bit of feedback, what they're doing. Basically, they are orchestrating calm, right? That's the general idea of what they're doing, and basically giving us some sort of plan of what the hell they're going to do as inflation seems to go rampant across the board. Right, so that's where we are first and foremost. Now, if I just get my pen back up. So you're going to be watching that sort of stuff as we go through the week. Now, don't forget, the real big, heavy impacting stuff is next week. Non-farm payrolls, we'll get the whole cycle of massive data again. There'll be a big build up in the US dollar. But this week, okay, it's like a bridging week where we're trying to bridge the gap. That's why I like to see the durable goods, see what's happening with those numbers. You'd have to think they're going to be strong. Does that turn into a strong dollar situation, risk off profile for the equity markets? Strong US numbers means, potentially more aggressive Federal Reserve. Dollar goes up, equity markets get hit, Euro, Sterling, Aussie, Kiwi fall, etc., so forth. So that's where we are. So the GfK consumer confidence numbers for the Euro on Tuesday. I've always liked the IFO, the GfK, and the ZOO data, right? It's all pretty well-respected, well-regarded numbers. So I'll be keeping an eye on that as we go forward. German inflation rate, well, that's obviously going to be interesting to see how that comes out. The prelim numbers now, I think that goes over the course of a day to get all that data. So don't sort of sit there and hold your breath. As we come into Thursday, we've still got Christine and the crew sort of banging away there, but the unemployment rate in the EU might be something interesting. But what will be more so, any US numbers at the moment, I'm sort of really peaking on them because it tells us a bit more about what the Fed are looking at, what they're dealing with, right? Personal income and personal spending. That's going to be interesting, right? So the idea of taking money out of the economy and raising interest rates is to try and reduce that. I think it's a bit early for those numbers to be pulling back a little bit this early. If they're really strong, I'll tell you what, the Fed's going to have to try and catch up and go more aggressively next time round in July. Now, Friday, inflation rate in the EU zone. It's one of those numbers that can come into play depending on how the market's set. The ISM manufacturing numbers, though, on Friday in the US, now that's worth having a bit of a bo peep at. Of course, we'll be running out of time with the markets at that point. Now, so we've got a nice steady start to the week. Now, if we come over here, just what you want to do is have a look through your charts and have a look around what's going on. To me, I'm sort of seeing something very clear. And this is, I've been doing this for 30 something years. Looks like to me, we get the last week of the month. The US dollar really isn't going to be a major focus unless the durable goods are strong. If we get weak US durable goods, the market's looking for an excuse to sort of sell dollars, right? Just to flip the market over. Euro looks prime for a move back up 100, 150 points potentially. Check out these equity markets, the S&P and NASDAQ. They look like they want to come back and test some resistance levels up here as well. So it just looks to me like we might, if we get a little bit of slight weakness in the US durable goods, we could have a weak dollar week, right? It's no change of the trend. As I said, US non-farm payrolls and the CPI and everything coming out in the next couple of weeks will really sort that out. But this is the week where you might get a dollar sell-off just because momentum on the dollar has faded, right? It's the last week of the month. We've got central bankers talking, not much data. It's a chance for a bit of a move higher. And that could see the cryptos move higher as well. Commodities, well, they're still down there, but they are sort of working their way back a little bit. Pretty much that CRB is just following the oil, which is a major percentage of that index. Gold just sort of cruising sideways there as well. So, you know what, on the face of it, there are, just by flicking through some of these charts, you can sort of start to see where things are coming into play. Dollar Swiss looks like it's just drifting down. You can see the dollar index just drifting through there as well. Man, is dollar yen fatigued yet? Well, it's stalling, but it's not really drifting. And you got the dollar CAD just drifting lower. Well, I tell you what, oil just doesn't want to go back below $100. I don't know. It's clearly being manipulated. So this is where I like to check these four bottom pairs out. Euro, sterling, Aussie, and Kiwi. They just look like they're ready for what I would call is like a relief rally, right? It's not like a genuine rally. It's just a relief rally. Build up of, once again, long dollar positions. Everyone's holding on to them through to the end of the month. But I tell you what, the fourth week, it's often the week that they can get crunched. We see a rally back in the pairs. And what it does is it revitalizes the market for the upcoming US numbers over the next 2 weeks, right? But, a week's a long time in the financial market. So we could see some interesting moves this week. I would be really piecing together the data and the equity markets, right? These are the two pressure points that we need to be keeping a close eye on. So let me just drop that calendar down. So just keep an eye on the way things start to connect. Actually, you know what? Let me just change it back to this page. And you can see how the numbers come out here. Does it impact the US equity markets positively or negatively, right? That's what you're sort of really trying to work out. And if it does, if there's a clear risk on profile, equities are rallying, would tell me the durable goods are weak. What we're looking for is Euro, Sterling, Aussie, Kiwi to rally and the dollar to fall against the other pairs. And now we've got something tangible to work with for the whole week, right? So make sure you check it out. If you can, if anything, have a look after the event, even on Tuesday, and see what the durable goods was and see if we can start to connect the dots, because it's a good connecting week. As I said, I think we might see a dollar sell-off. It smells like it, and it definitely looks like it. All right, guys, that's pretty much it. There's not much more to go through this week than that. the whole aim of this fourth week as well, it's not often you're going to make, all your money this week, right? It's not the big, it's just like it's a gap week, right? So don't overtrade it. Don't put too much capital at risk on these opportunities, which may not be as tangible as when the markets are kicking in with fresh momentum from the fresh major US fundamentals, which we will see the following week and the week after that. All right. Have a good one, guys. All the best. Cheerio.